Welcome to the COVID-19 Special Viewpoint Series. This is a kind of a series that EPS as a company has started, wherein we invite important who's who of the industry to share some thoughts with the participants as to what's going to be. In that regard, we are very happy to have amidst us, Mr. Udayan. We are at a turning point in the industry of life, of our history, when we are witnessing something unimaginable and unforeseeable. We suddenly have been put into a situation, and it is not only us, it's across the globe. We're put in a box, and things are not going to be the same anymore. What was normal is not going to be normal anymore. So in that, we have to rethink, we have to reimagine, like the tagline of this COVID-19 special series. We have to reimagine everything of our business, whether it is B2B, B2C, B2G, education, medical, healthcare, everything has to be reimagined. And, the work from home, this is becoming like a norm. So what is the new norm new normal will not be normal. That's the kind of analogy we get. And, it's so pertinent when Clinton had said that we always overestimate the change that will occur in the next 2 years and underestimate the change that will occur in the 10 years that is going to come. So to throw some very pertinent points to our discussion, I'm very, very glad to welcome Mr. Udayan Goyal. You can see his profile. So for you to read, Udayan has been is a proponent of technology-driven reformation. I think he's been known. People who have gone to Cybos and other venues have already heard about him. Okay, he's been a founder and managing partner of APIS Partners. He's managing a 250 million private equity fund. He's invested in many of those really new startups. And Zap is the one which has been in the limelight for some time now. The UK mobile payment system. People have been talking about it. He he kind of curates the very popular Future of Money, which also features in Cybos. He was formerly the managing director and global head of financial technology, Deutsche Bank. And Udayan has been, he's from the Trinity College of Cambridge. Udayan, a very, very warm welcome to you. Thanks for coming so early from London. It's indeed an honor to us that you are amongst us. And we would want to get going straight away into the discussion. So one of the things that we all have, like I said, we are at a point of history which we never thought about, and things are going to change dramatically. So what do you see in the next 10 years for banks, and in particular the payment industry? We can let us know what you feel.
So I think, I think we've gone, as you mentioned, we're in a very unique situation today. And the unique situation is largely been that we have to rethink a number of core areas that we have always lived with. So how do we work? Do we work from home? How does our interaction proceed in the future, where you have this issue of infection, fear of infection, proximity, all these things. And behind that, the financial services industry and banking in particular is going to have to adapt, and it's going to have to adapt in a fairly significant way. At the core of this, as many people have been looking at over the last few months, is the use of data, because people's identity outside of a physical manifestation is largely data driven. And if you're largely data driven, then the only way really that you can propagate and actually do business and live your life, frankly, in an environment where it's hard to use your physical manifestation, let's say for identity or for identity related issues, is the usage of data. And I think this is the starting point when we start to think about where the financial services industry and the banking industry is going. the use and the intelligent use of data across multiple platforms, including banking platforms, is going to become more ubiquitous within a set of data guideline rules and data protection rules that are going to allow companies as well as all sorts of different business models to come up to use that data. So I think what we're seeing is an acceleration of a transformation of the industry that started a number of years ago with what we call the Open Banking Initiative, and is now probably going to accelerate fairly significantly.
Yeah, thank you, thank you. That's very nice. Yeah, and I also see a lot of changes that are currently leading, technology company that going forward, work from home around working from home. So this change is coming, and I think you put it very correctly. The business models will change. There will be a 360-degree change of things to come. So that's that gives us a good insight onto what's coming in the future. According to you, sir, which industry and ideas will attract the next wave of investments that are so important for India and from a global point of view?
Well, I think clearly there are three broad areas that are going to attract very significant investment. The first is health tech and health related technology. There's a strong crossover between health tech and insurtech, largely because the health insurance industry and the life insurance industry is very strongly linked to the health technology industry. So that would be number one. The second is education technology. So distance learning, the whole concept of education and using technology platforms to drive education is coming of age, as many of like my children are doing distance learning right now. This has really spurred significant investment in. And actually, interestingly, the third area is the financial technology industry, because the financial technology industry is a very large driver of technology. Now, on the back end of this, of course, you have logistics, because of the concept of e-commerce, both e-commerce and logistics. But the question mark is where the large investments are going to come. And I think the larger investments as a group are probably going to come in the first three. Now, one would argue that, delving a little bit deeper into financial technology and why financial technology and how it relates to the topic, which is around this open banking concept, I think, open banking is really all about building business models through a partnership with the consumption of APIs for the delivery of banking as a service. So the concept is really you are able to plug into platforms, use the data, and then provide a service that's based on that data in a sort of SaaS model, but banking as a service. Obviously, this is a kind of a new business model. It's creating lots of innovation, and governments and regulators are pushing this hard across the globe. Now, in the past, banks have been largely wary of embarking onto this and have really been pushed into this by regulators and by consumer pressure. Today, this partnership approach is actually something that banks are finding a need to embrace, because this collaborative relationship, which allows other companies to service their customers well as long as they maintain customer ownership, becomes a very important part of their overall business model. So this basically improves customer reach. It allows the delivery of interesting bundled services and provides better support to customers. And so this is a very important part of I think, the evolution of the industry, in order to embrace it. And this itself is going to bring investment in as this industry actually evolves.
Yeah. So to reiterate, you feel that the industries that will really attract a lot of investments are financial technologies, health, and education. Is that the order?
Health, education, and then e-commerce and logistics, which is obviously, yeah.
So saying that the open banking, using open banking is is the likely norm that is likely to come, although nobody can predict the landscape that's really going to come up in the next few years. Hard to guess what's going to be the landscape. Do you see a future for brick and mortar branches to survive, or they are all going to die down?
I've always said, and I've said this for 10, 15 years, that brick and mortar branches will ultimately disappear. So, this crisis will actually accelerate the death of brick and mortar branches. So I really don't see, and this comes back to what I said right at the beginning, once you solve for the digital identity problem, you really don't need a physical manifestation of any type of financial services industry. Largely because once you can authenticate identity in a digital way, then everything can be carried out on a phone or online or in some digital form. So it's very clear to me that the broad concept of branch banking and branches is going to disappear.
Okay, yeah. So I think India will not be an exception in the brick and mortar. I think we will see less and less of branches getting opened up, though the amalgamation of the banks will create a surplus of branches because almost every street has so many of those same banks which are now into one entity. So there's a good thought that so more technology will come into play, so less of brick and mortar branches. What do you feel is about on the regulations, the banking regulations and other industry? Because this entire change of banking to moving from this traditional banking to open banking will mean much more regulations that will come. Will come, and I'm sure Mr. Kaza will like to ask this question. Maybe we'll leave the questions for the participants a little later. So let him complete, so then we can. I'm sure this regulations is a key point in the way we are going to transform ourselves.
So I think the regulatory framework needs to be broadly split into three areas, and we're starting to see this develop in most. Firstly is access, and I think this is related to a question that came up in the Q&A. But basically there'll be regulations which will regulate how third-party companies can get access to bank data through APIs. Today, there are companies that are coming up that are actually building the access layer based on those regulations. Yeah. One of those companies, which is called TrueLayer, is a company that, for example, I'm invested in through one of my other entities. So there, you're starting to see a number of those companies come up across the world that are building the access layer through a unified API structure, so that there's a single set of, basically a single SDK through that API will get you into all the different banks in a particular market. So that's the first set of regulations. So it's about access, and within that is basically the security protocols and what you need to do to authenticate to make sure that you have adequate security to get it.
Yeah.
The second set of regulations is around data and data usage. Today, you already have pretty comprehensive data guidelines in a European Union context. Yes. Which really governs the use of data, how data is done. So this is what we call GDPR, which is now becoming pretty ubiquitous in other markets as well, as people basically adopt similar regulations. So that usage of data becomes very important because it's about customer consent, allowing customers to give that consent in a way that's actually simple and easy to do, and a way that's also auditable, so that you know who's got what and who's used what. So that's basically the second set of data regulations. And the third set of regulations actually relate to the commercial and contractual arrangements that exist between the different parties within the ecosystem. Yeah. So there's an entire legal regulatory layer that's going to exist, that's going to come up, which governs essentially how the banking platform will actually talk to, let's say, a financial technology company that's using the data, which will talk to the customer. All these regulations will have some form of legal framework, and I suspect it's going to be a relatively standardized legal framework that's going to come up. And so those are the three pillars that will come up from a regulatory perspective.
Excellent. I think that was very well summed up, Udayan. I think we could see a lot of regulatory changes coming up in the days to come, And so that, with the changes of that, that brings us to one of the question, the final question to you before I throw open this to the other participants. What is the future of the digital money? Will governments ever reconcile with dual currency, which is the paper and the virtual currency? Will we see bitcoins or cryptocurrencies coming into the play? Uh, and do you see so far there has been resistance, but with this change that is coming up, do you see that things will change towards digital cryptocurrencies and digital money?
So the short answer to your question is absolutely yes. So I think you need to bifurcate this answer into two. You need to look at digital fiat currency, and then you need to look at traditional, what we call cryptocurrency. So the cryptocurrency, which is Bitcoin and Ethereum and those currencies which do not, and I'll come back to those in a second. And then you have the traditional fiat currencies that are moving on to a digital platform. So I don't know if people have been reading, but as you know, over the last few weeks, China has begun to trial its new digital currency in 4 major cities. And so that I think the city trials are actually starting as early as next week. So Shenzhen, Suzhou, Chengdu, and Beijing are basically where some of the areas of the Winter Olympics are going to also occur, are going to start trialing this, what they call e-renminbi currency. And the idea behind the e-renminbi currency is that rather than having a physical manifestation of the currency, which is a banknote that we're so used to, you will sign up to a form of a standardized digital wallet, and then your e-renminbi will sit within that digital wallet, and you can transact using that digital wallet. Now, the underlying infrastructure that's being used is broadly the same as what other cryptocurrencies use. The difference being that the issuance of the currency is very similar to fiat currencies, where it is actually controlled by the central bank. And in this particular case, it's pegged to the national currency. So it essentially becomes an alternative to a physical manifestation of cash. The idea being that you can actually, the frictional cost of moving around that money is very, very close to zero, because you're using the very similar infrastructure. So I think we're already starting to see that in the US with the e-dollar, or what we call tokenized dollar, starting to come up in certain platforms, which are essentially pegged to the dollar. Yeah. And actually you can use the concept of a token to actually peg to anything. You can do it to a car, you can do it to any form of either physical or virtual goods can actually be attached to a coin, and then the coin actually acts almost like your deed of ownership, which you can then transfer between. So this is the first side. The second side, which has obviously been a lot more complicated, has been that we will also see a rise of further usage of traditional cryptocurrencies, Bitcoin, Ethereum, Ether, others. The reason behind that is twofold. One is what you've started to see is global central banks, particularly the Fed and others, printing a lot of currency in this crisis, right? So by doing these large, massive amounts of quantitative easing, these currencies become a proxy to gold as an anti-inflationary hedge. And so a lot of people are starting to diversify their asset allocation in order to have some form of cryptocurrency in there as effectively a proxy to what people would have held 50 or 100 years ago in a situation like this, which is gold. True. And so as that happens, there'll be more and more people. So today, I believe there are somewhere in the region of 10 million wallets that trade Bitcoin. That's a tiny number. That probably will increase to 100 or 500 million in the next 3 to 4, 5 years, when people will start to actually embrace this as more of a regular asset class. You're also seeing a number of central banks accept it. So the Japanese are accepting this as a currency. You're starting to see the US starting to look at this. So as these things happen, and as you build a institutional infrastructure around trading those assets, you actually will expand it as an asset class.
Oh, very good. Excellent. Is Bank of England looking at it positively?
Bank of England is looking at both the digital currency. So I think they will also do a similar outcome to what the Chinese have done around the e-renminbi. So they're definitely looking at that, and they're looking at how they're going to work within the Bitcoin stroke Ether infrastructure. Those Bitcoin and Ether are the two biggest, but there are many others that exist in that void.
Super. That's wonderful. I think you gave a very good answer to that. So I'm going to ask some questions which are coming from the participants, Udayan. So let me take Akash Shetty is asking a question. Will fintech companies get access to APIs disclosed by financial institutions?
So I don't think that they will get direct access, but they will get indirect access. So what I talked about earlier, which is these intermediate companies coming up, what you're going to have is an intermediate company that will write into multiple bank APIs. And they will then combine access through a single API that they have. And then if credentials as a fintech company and you've built your consent of customer, then you will have access through them through these companies.
Okay. Yeah. So you are saying that access will be difficult?
I think direct access will be difficult. Will be because banks don't want to deal with 5,000 individual relationships. They will want to outsource that. If effectively what they're doing is they're outsourcing it to an aggregator, and then you will basically go through the aggregator to get access.
Okay.
So it's a little bit like, it's a little bit like NPCI access. Not everybody can go and get direct access into NPCI into the switch, right?
Right.
So, or let's say BBPS, the Bharat Bill Pay System, you need certain credentials,
right.
But you have aggregators who sit there where you can get access through those aggregators.
Absolutely, yeah. I think that's well put. That example is fantastic. I hope, Akash, you have got the answer. Let me move on to the next question. It's come from Priya. Priya asked the question, which is, I think, Priya, we have to, like I said, we have to reimagine this entire scenario because we are at a point of history where things are going to change. But nevertheless, I will ask this question to Udayan. She says, do you believe our conservative or traditional mindset is ready for hyper-tech open banking world in the days to come?
Yes, I would say for sure, because inertia and momentum is going to carry it through regardless of whether people are ready or not. I think there's a group that as you rightly say, and that's largely the traditional banking community who've always resisted. However, it is customer needs and customer pressure that will push this to happen. So regardless of whether people are ready or not, I think the inertia is there and it's just going to happen.
Yeah, absolutely. I think the change is coming and it will happen. So changes will happen, Priya, no matter what, however conservative you are, change is there to happen and we have to change. So let's move on to the third question. Nikunj has a question on SCA, that is strong customer authentication. Do you think Aadhaar, which is the Indian system, would play an important role while implementing that in India? And the second question he has is, keeping in mind that India is still waiting its GDPR kind of law, similar to PSD and GDPR, is this SCA important?
So firstly, let me answer the second question. Of course, SCA is at the cornerstone of open banking and data access, because this goes back into the customer consent layer and also the authentication layer. All of these things come together. And so you absolutely need to have some form of it to exist. Now, the concept of SCA came out because of the second payment service directive, PSD2. And in September 2019, the regs for that were released and basically made available to everybody, and people have built businesses around that. So absolutely cornerstone. Do I think Aadhaar is going to play a role? That's an interesting question, and that's an interesting question because it relates a little bit to the regulatory oversight. Technically, banking data should fall under the regulatory oversight of the Reserve Bank of India. Aadhaar technically doesn't really fall under the regulatory oversight of the Reserve Bank of India. So the question mark is that many the way a lot of countries have dealt with this is to create a completely separate data regulator, and the data regulator has oversight over both, and also collaborates with the banking regulator around access to financial data that's coming in. I don't think that that regulatory framework is fully developed right now, and only once the regulatory framework is developed, only then will one have a view on whether other will play the strong role or whether there'll be a separate entity that will focus purely on the implementation of the PST2 like regulation that will exist in India. GDPR needs to sit, the GDPR like regulation needs to sit with the data regulator or whoever is going to end up being having the core oversight over data usage. So today, obviously, it's data protection, but this is wider and it gets a little bit more complicated.
That's true. Thank you. That was lovely, Udayan. I hope, Nikunj, you got the answer for that. I have a question from Umakant from Bangalore. He says, open banking in India would be easy, as many banks have bank agents and co-origin of loans is a norm. What is your take?
So I would tend to agree. The many banks, and we've worked with some companies that have already done this. Many banks have written into, many fintech companies have written into bank APIs to develop product already, but they've done it really on a direct-to-direct basis. So the problem has been that if you wanted to work with 50 banks, you had to write into 50 APIs. So that, but that's happened. So what it means is two things. One is that means the banks themselves, at least most of them, are largely habituated to the idea of giving data access to a partner in the ecosystem. So once other people start to write it, and specifically aggregators start to come up to write into those, then I think that process will be relatively smooth. I think the one thing I would say is that you probably won't have many aggregators. You're probably going to have a handful of aggregators because banks will be cautious not to give access to too many people for audit and security purposes. And so you start to see competing aggregators who will essentially sit on top. And I actually think it will be a relatively straightforward process.
Yeah, that was lovely, Udayan. So another excellent answer. So these were the 4 questions I received. Is there anybody who would want to ask? Unmute yourself and you could ask a question directly to Udayan. Okay, I have before that person, you could get ready. I have one more question so I can shoot that out to Udayan. Vrunda is asking a question. Any successful open banking model, is it implemented anywhere and is it going good?
I think we're still in the early days of open banking, but you're starting to see some level of a success in Europe with open banking. You've got Nordic companies that have come up, which have built open banking layers. You've got TrueLayer that have built up, and you're starting to see interesting business models that have come up. So this is something that we are starting to see quite a bit of. Whether it's the question mark is what is success. I think the first step in success is to show that the model works. I think that's being clearly demonstrated. That's being clearly demonstrated but in many different segments, in lending, in trade and commodity finance, in many other areas. You can also go to even countries as far as Australia, which have their own open banking infrastructure. And you can basically see interesting products. So Commonwealth Bank of Australia has created something called Benefits Finder, which actually identifies unclaimed benefits or rebates using an open banking infrastructure by looking at other sources of data. Nordea, which is a Danish bank, has launched a subscription management service, which allows customers to get an overview of all their subscriptions, regardless of provider, and unsubscribe straight from the banking interface. So you're starting to see many new products that are coming up, which are using the infrastructure, which didn't exist before. And probably the area that's going to be the most interesting is going to be the aggregated personal finance applications, and there are many of those that are starting to come up, and that essentially allows you to get a single kind of snapshot balance sheet view of all your finances across multiple product providers. So definitely starting to see some interesting areas of success, and I think we'll continue to see many more.
Okay. So the last, Brinda again asks,
Okay.
I think you have answered the case
Okay,
study.
Tyag here.
Yeah.
Hello.
Go ahead.
Okay, Tyag here. Yeah, Udayan. Hi, Seshadri here. Any new technology comes with its own baggage of, I can say, challenges, opportunities. The question is, this API and open banking, what are the main concerns in terms of cybercrime, cyber theft, and fraud, and how the challenges are being faced in terms of user acceptance, in terms of customer servicing, and third, any new technology with open banking also comes with its opportunities. So what's your take on the business growth per se and the investments? Over to you there.
Okay, so on the security side, yes. Well, cybersecurity in this new world is a given that it's going to be a big area of growth and a big issue. But this is not dissimilar to when we started to do mobile banking and internet banking, right? The challenges are broadly the same, the issues are broadly the same, and it comes back to strong authentication, which is based on a digital identity. And once we solve for the digital, India is in a better position than most places in the world on this because of the biometric identification that Aadhaar allows. So that actually puts India in a very unique position. The only other country in the world that even close to this is Nigeria, which has created a biometric identification system, but only for people with bank accounts, not for the population as a whole. So even for a population as a whole, this is pretty unique. So this actually solves many of the authentication issues. That being said, you'll always have criminals who are going to be looking to exploit weaknesses in the system. And that is part of the reason that the banks will only work with aggregators and they won't work with anybody to give access to APIs, because it allows them to have at least a strong link into the aggregator, and also pushes the responsibility to a specialist to make sure that there's no abuse of the pulling of that data, or indeed any type of fraud. The biggest issue in this type of fraud is the idea of being able to do push payments. Now, PSD2 technically allows push payments to happen. And so that is where you have a lot of fraud, because if you have the credentials, you can go into a bank account and actually you can push that payment out very, very, very easily. And that can create lots of opportunities for fraud. But obviously strong authentication is what solves for that. So that's kind of the security authentication part of the puzzle. In terms of business models, lots of new business models are going to come up. Probably the one that's going to come up most is the ability for different providers to compete for products using your data. So let's give you an example. You can have 10 different providers of loans who can access your data with your permission, pull it, and essentially compete for your money on the loan side, because they're able to risk assess you based on all your historical financial data, which previously your bank would be the only people to have. And so that actually allows a business model. So even if you look at SMEs, there are companies that are coming out that are using open banking for a range of cash planning tools. For instance, they can pull the data, do the analysis, provide an automated cash portfolio recommendation based on historical balances, basically saying that this is how you should look at your overnight deposits, etc. So you're starting to see business models that really didn't exist before that are going to come up, and there's a whole bunch of them that one can think of.
Thanks, Udayan. It's a wonderful insight. Yeah.
Can I ask a question now?
Please.
Hello?
Please go ahead.
Somebody wants to ask a question. Go ahead.
Yeah, okay. Mr. Udayan, good morning to you. And this is, my name is Sriram. I wanted to know, you said that China is about to test e-currency in 4 of the cities there.
Yeah.
I was interested in knowing if the e-currency is going to sit on a blockchain platform.
I believe it does sit on a blockchain chain. I'm not 100% sure, but I believe it sits on a similar platform. But as I said before, the issuance is and is control is actually based on an attachment to the local to the actual renminbi. So the number that is in circulation is controlled by the central bank.
Okay, okay, sir. Thank you, sir.
Kumar?
I think
he's on mute.
yes.
Kumar is on mute.
Okay. Sorry. There's a question on ATM, which is so relevant to EPS. Chief J asks, can ATM lobby be shared by many banks to optimize cost and allow customers to access cash across?
Yeah, the answer to that is yes. We're already starting to see that business model. So essentially, that's what the white label business model is. The white label business model is a unbranded access point that gets you, or a own brand or an independent branded access point that gets you access to any bank account to pull your cash out. I think the concept of bank branded ATMs over time will disappear, and we will move to white label ATMs, and those become the network that you access the cash. Think of it in the same way as when you access your bank account at, let's say, Axis Bank or Yes Bank or any of the banks. You do it through your mobile phone, and your mobile phone and the mobile network is not controlled by the bank. Yes. It's a carrier network that's essentially completely separate from the bank, but you're using those pipes to get access to your bank. An ATM network is no different from that, right? It is essentially an infrastructure that allows you access to your network and then gives you a physical manifestation of what is digital stored in your bank account. And so that the logical step is to do that now. And the mobile network analogy is a good one, because when mobile networks first started up 20 or odd years ago, the different networks, so think of Airtel and Vodafone, would build their own tower networks, right? So you'd have Vodafone towers, and next to it you'd have an Airtel tower, and next to it you have a Jio tower, right? Today, in most countries and even in India, mobile networks share towers. So you'll have a single tower infrastructure, which all the mobile networks are sharing. So this concept of shared infrastructure, which then reduces capex and cost, is something that's going to come here too.
Yeah, that's great. Thanks. Mani, go ahead.
Yeah, then I have one question to you. Let me just come on the video as well. Like most of us, I think you would have had a shock when this basically became the news and the whole world went after shutdown and lockdown and after lockdown. And all of us were shocked. Okay. But after basically a month or so now, do you are still in shock, or you basically see it still an opportunity?
It's not first it's not a shock. I think that every so many years we either have a significant economic downturn, or you have some form of systemic shock that creates an economic downturn. This is like in the 70s you had the oil crisis. In the early 2000s, you had the tech crisis. In the late 2000s, you had the financial crisis. So, this is not, you had the Asian currency crisis in the late 90s. This is not dissimilar. The thing that makes this unique is that this type of shock generally comes every 100 years. So the last type of shock that came like this was 1918, which was the influenza pandemic. And you've had one of these every sort of 100 years, right? You do have them. So look, so these things happen. The manifestation of this is not that dissimilar to what happened in the COVID-19 pandemic. The difference is that our ability to react to this has been significantly quicker because of technology. So whereas in the 18 pandemic, people didn't even know what the pathogen was for like 6 months. Here in about a week, we knew exactly what we were dealing with, and people were starting to work on a solution. And I think the big difference is that, you know, this pathogen is significantly more virulent than anything that's happened before. And so actually, you know, the way you've had to deal with it has been different. Now, therefore, do we see it as an issue? Of course, we see it as an issue because businesses are going to struggle through this because of cash flow and other issues and the need to adapt to a very new environment. But we see it as an enormous opportunity because what it allows the stronger businesses to do, and this happens in every crisis, the strong businesses survive, the weaker ones fall away on the wayside or get consolidated by the stronger businesses. And we see this as an opportunity, including for EPS as a strong business, to actually become, you know, one of the people who are going to come out of this much stronger, and actually one of the consolidators and one of the people who are going to pick up business through that strength. And so that's how we're approaching many of the discussions within our portfolio, which is we started with make sure you've got everything in order from a cash flow perspective, make sure you have everything in order from a business model perspective, make sure you have everything in order to weather this. And now the discussion we're having with everybody is, okay, let's now look for the opportunities and go after the opportunities.
Okay. Thank you. I have to get into another personal call with you because I had some good calls from somebody else. Thank you. Thank you, KK.
Yeah, thank you very much, Udayan. There are a couple of questions, but I think we have to be, cognizant of the fact it's early morning for you. Yeah. So thank you very much for coming at this early morning and enlightening us with what's happening and what's going to happen to us. What you say is right. Change is there. It's inevitable. Things are going to change, and I think we have to reimagine ourselves, do the transformation. And I would request all participants to put to clap by putting in your chat clap, so that we are in a position to. That's the best we can do sitting online. Thank you, Udayan. Thank you very, very much.
Thank you very much. Thank you.
Thank you.
Thanks. Thank you. Bye-bye.